Our guest this morning, Peter Cardillo, Chief Market Economist at Spartan Capital Securities, joining in this morning. Peter, thanks so much for taking the time. I'm a little surprised that the markets globally have not reacted more sharply to the escalation intentions in the West Asia region. Is there an expectation that it will be controlled, that de-escalation will take place at some point?
Well, look, it's quite clear that Israel has taken a hard line on this war now. It's almost a year, and they are determined to finish the job. Now, of course, the escalation of the war, which now includes Lebanon and most likely, probably even Iran, that is the big question mark. Will there be a full-scale war between Israel and the Iranians? If that were to happen, then I think the markets would react differently. Up until now, yes, the Iranians retaliated. The Israelis have vowed that they will retaliate. So it's more or less a war of words, and with some let's say, minor retaliation. Now, if that were to escalate, then things would get quite murky for the markets.
I'm curious what you think about oil prices, because they've been relatively muted despite what we've been seeing, and generally they're the first to react. $74 or thereabouts for Brent, yeah. And this is I guess to a certain extent on account of the expectations of soft economic growth in various parts of the world. Tell us what you think about the worst case scenario here. If there is an escalation, if crude oil does rise, what does that mean for the global economy?
Well, if there were an all and outright war between Israel and Iran, obviously that would probably engage the rest of the oil-producing nations within the region. And that could become very serious because they could perhaps enact a blockade, and that would send oil prices way above 150, possibly to 200. But I don't expect that to happen. And I think why the oil market has not responded more fully, in the sense that we're not up to $85 or $90 at this point, is because of the fact that OPEC is ready to undo their quota system. And just the other day, the Saudis indicated that if cheating continues, there's a good possibility that oil prices could drop as low as $50 a barrel. And so I think that's on the minds of traders. And of course, the oil factor right now is key. We've had maybe 5 consecutive weeks of oil inventories dropping, and today that was reversed. So again, it's a wait and see market, and if the war factor continues to be contained without any threats of a blockage in exports, yeah, by the OPEC group, yeah, then I think the fundamentals, which is the supply factor, will probably contain oil prices. Yeah. I don't think that they go much higher from these levels, if that's the scenario.
Yeah, Peter, thanks so much. Valuable insight this morning. Thanks so much for joining us and giving us that perspective.